We're now at the point where we got to research numbers, okay? We now are at the point where we got to research numbers. Now, Cam, the ones we picked, give them to me.
Yes, sir. That is AMD, Micron, Cisco, Rig, Square.
Hold on. If I could spell. I just lost the spelling contest on AMD of all things. All I had, and literally I'm spelling it out as I go. I can't put in ZMD. Okay, AMD, Micron.
Cisco. Sorry about that.
Okay.
Rig, Square, TEVA, and we kicked Dropbox off there at the end. So these are the ones we're working with.
6. Okay. So if I missed one, let me know, but I think we got plenty of work with on these 6. The very first thing I'm going to do is find some of the basic data. Now, when you're running a 2-monitor setup, this makes it really nice to kind of flip things out side by side. But when you're screen sharing, you can't do that. So I'm going to put it top and bottom kind of like this. Okay. Now, I've got some information here. Yeah, Marcus, I guess. Fancy it is. Let me change a setting here, though, so we can see it. ATR only. No, can't adjust that from now. It's a custom setting. So I'm going to have to zoom in here and kind of look at that real close, see if I can see it. So let's start with AMD. Okay, let's start with AMD. Now, most of you guys know how to find this and gather this data, but let's all look real close here, okay? Very good. Okay, all right, let's start with AMD. Let's put in the chart right here. The price, $16.56. The ATR, 0.59. You can have your charts up and double checking this as we go. Micron. I'm going to gather some of this from the chart itself. The price, $55.45. The ATR, 2.39. Okay. Cisco. $43.58. 0.72. Rig. There's one on your key, CC, but also I'll make sure you have a link, or I can send you one. Rig is 1352. The ATR is 0.61. Square, 6728 and 2.7. Okay, and then Teva. $23.73, and the ATR is 0.67. Now, by the way, there's another way you can get that same data. We could have built a watch list over here. Inside thinkorswim, these watch lists are customizable. There's a gear button right here that if you customize it, you can find the ATR and add that item, okay? So many different tools in thinkorswim, and I could have gathered the ATR by building a watch list right here. So there's other ways you can get some of that basic information as well. The chart is great too. No, it doesn't really matter as long as you're gathering it. Now the first section is to find just the stock information, price and ATR, okay? So put down first 3 columns from the chart. That's where you're going to get it. And if you don't have the ATR in your chart, you need to add the ATR to your chart. The next 1, 2, 3, 4 columns, skip to the next 4 columns are going to come from the option chain, okay? So now what we're going to do is we're going to go into the trade tab. I'm going to detach a window. I'm going to minimize this. And I'm going to put this, stack it on top of each other. And by the way, if there's anything from tonight's session you don't get clarity on, email me directly, Tim@Tackle Trading, okay? I had some really good conversations recently with a few of you. Be happy to help you if we don't get to it or if I miss something. So here we are. We've got our chart open. We've got our spreadsheet open. Now we're just data gathering. And now I like to run it one at a time. So here we are. I'm going to put in Micron. Now, before I come to a smaller screen, check this out. There are rules to the option chain. If you don't know what your rules are, remember at the bottom of the spreadsheet are the exact rules that you need to have for your strategy, okay? So if this is the first time you're ever going to be working with some paper trading or naked puts, or if you just need a review, come and read these things. And here's something that I understand. These terms may not be familiar to you. And if you have a question, ask it. Talk to a trader, talk in the community, come into these shows, ask questions. The theory behind a naked put is to sell a put on a bullish, stock or a neutral stock that you want to make some money on. Kind of like the example with all these, we're willing to buy those stocks, and by willing to buying them, they're going to pay us for that. We want to have the stock with strong fundamentals. We want to have it in a certain technical condition, or if we're just bullish on it. The technical bias is a 0 to a 2, so which means we're bullish. Theta means it's a cash flow trade. That's just terminology we use in trading, okay? The deltas we're going to use are between 0.05 and 0.25. Now, I always make my students, and everybody do this, go through and read these lines one at a time and make sure that you know what that means, you don't have to be great at everything, but you got to become good at something well enough to where you can trade it consistently. And if you don't have a strategy yet, start with covered call, then naked put, then these spreads. Start with cash flow, okay? And really learn the nuances of each of these different things. For tonight, we're going to be closer to 0.25, okay? So we're going to stick on a little higher side of the delta. We are not going to sell 3 months of time. We're going to sell 1 month of time. That's what we're going to do. We got to get 8 to 15% ROI, and then we're going to build a trading plan in a little bit. So review your rules and make sure you understand them. There's no question, okay? We're 25 delta. Well, there's no such thing as safe or risky just based on delta. The way we manage it is what will make it safe. And Casey, we'll look at it on a case-by-case basis. But we got to start somewhere. You got to have kind of a baseline where you go with. And what a lot of traders will do, Casey, is they would do all of this. Okay, watch this. I love doing this in a spreadsheet. And on the top, I would do them all around 25, and then in the middle, I'd do them all around 10. And then I would compare them to see which ones I like, right? So one of the things I like doing is playing around with the numbers that are within the rules and then building a trade that makes the most sense based on what's in front of me. I would love it if everything was just ironclad, have to do it the same way every time, but there's always a little wiggle in the rules, okay? And there's a reason, and that's because as a trader, you've got to custom fit the strategy to what's in front of you based on the general guidelines of your rules, okay? So it's a good point, and you can go lower delta. And what you may want to do when you're running your spreadsheet numbers is like I just did, run the numbers all at a higher delta, then compare them at a lower delta, and just see what you see. I mean, it's a great way to learn this stuff as well. Let's stick to the higher delta for now, and if it's not enough cushion, we'll go to a lower delta, is what we'll do. All right, so now I've got this stuff up, and let's do this down this way. By the way, looking at the clock, I think we'll probably be about 25 more minutes. So plan your time. If you have to leave right at 9:30 East, that's great. But just email me if you have any questions and catch the recording once Cam gets it up there. But I'm guessing we'll be about 25, 30 more minutes from here, okay? I know these are planned for an hour, but, I'm long-winded, I guess. It is what it is. AMD, let's start with right here. Advanced micro devices. I'm going to use the 36-day option. I'm going to set the strikes down closer to 10. And I'm going to look at the delta over here on the put side. 0.26 is the 15 strike price. I'm going to build that as an order. Now I've got this defaulted to 10. Why don't I change that to 1 each and every time? You can change your order defaults to fit your position sizing, by the way. I generally recommend you set your system to have it say 1 contract. You know, I know the default is 10, but you can change that. Okay. There you go. All right, so here we are, 53-cent midpoint between the bid and the ask. I look at the numbers, and here's my dialog box. Now, the next 4 columns come from the option chain, okay? The month is going to be the August. The DTE was 36. So I can put in right here, August, 36. The strike price is 15. The delta was 0.26. It gives me a little bit of cushion. The net credit is 53, and the buying power effect is 171. And let's put in 0.53 and 171. See here, nope, 53 and 171. Now I want you to look at this right here, okay? If we put this trade on based on the margin, we have a potential 31% return, okay? Now to go with Casey's question, and I thought it was a great point, could we go lower delta for safety? Of course we could. You know, we could run the 16 and the 9 delta and see which one we want to do. Looking at the 9 delta here, we're at 9 cents. See, it still is an August 36-day option. Now we go to the 13 strike for a delta of 0.09, and now our credit does go down. We're getting 14 bucks on 130, okay? $14 on 130. Take a look at this. Okay. AMD was right on the cusp of what I was willing to consider at the first place. Now, I want everybody to stop for a second, just think for a second, right? And you could absolutely compare it in 3 different rows. You can get really creative. That's the point of trading. You're now looking at numbers and researching numbers. You know, we're not just going to become a robot and just ding, 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 ding down the list. We have to think about this right now because our judgment is what it's going to come down to on which one we actually decide. The point of this research, by the way, for me, would be to pick 1 or 2 candidates here and trade 1 or 2. We started with 15 stocks that I thought were good charts. I took out 7 of them, or 8 of them, 9 of them. Now we're down to 6. Now from this 6, if we can finish with 1 or 2, I feel like I've done my job, okay? AMD, we have 2 different numbers on. Chart, cushion, credit. Which one is better? Yeah. If you have to think about this right now, I want you to. If you had to either pick the 26 delta or the 9 delta here, which one is a better trade? Probably the 9 delta. No, it doesn't really depend. Okay. Cushion is a priority over credit. See, if you can get more cushion and still get enough money to make a good trade, you take it. Cushion is a priority over credit. Now, this ATR buffer right here, in your naked put spreadsheet tab, this will automatically populate, okay? If it's less than 2, I would have disqualified it. At 2.2 buffer on the 26 delta, I don't feel comfortable with that for a cash flow trade. You've got to remember philosophy here, guys, okay? The whole point is that with our start with an idea, we're using some of our capital in a way that's safer. We don't want to be more aggressive. We don't want to be more dangerous with everything that we do. We're allocating some capital over here in what I deem to be our cash flow techniques because we want to be safer. If we started with an idea that was going to be more aggressive, I might have a different take. If we're saying, hey, I want to speculate, I want to start with a different take, right? Now, this is 1 And that's right, it is in a margin account. That's right. If you're in an IRA, your numbers would be different. They call that cash secured, right, is what it is. But anyway, so keep it to where our obvious lane is, and cushion is going to be a priority. Now let's move on to Micron here. We're going to start cooking with gas. What I want to do right now is kind of go rapid fire style. Cam, you watch my numbers and make sure I get them all right.
Yes,
I'll think out loud. You take some notes. Micron, we're also going to do the August, 36 days till expiration. And this one right here is the one we're going to do. We're going to do the 50 strike. We're going to pick up a 0.20 delta. That's disqualified right there. Look at that. The ATR buffer comes in at 1.9. Not going to do it. Not going to do it. Okay. It's not enough cushion. Cushion is a priority over credit. The reason why the most important column on this whole spreadsheet is ATR buffer. Okay. You have to have enough cushion in that trade to make it a comfortable. You know, so let's take a look. We can double check the numbers, okay? But cushion is a priority over credit because there's enough money in this stuff as long as you play safe. You know, Micron, and I've got 2.39 right here, ATR. That's what I got on the daily, you know, 2.39. So now what can I do? I've got two choices. I can try a lower delta and see if it works, but this one is instantly out. Boom, see you later, done, okay? Micron's out. Now AMD, not enough. I don't like that one. Down here, let's look at this. So AMD, I'll color them red if they're out. I'll highlight them yellow if I consider it. Now the only thing I could do is try going a lower delta. You know, if I'm trying to squeeze in something on Micron to make it work, well, yeah, I could make it work probably. Let's take a look at this 6 delta. By the way, are you guys learning tonight? How's our pace? Okay, good. Good. All right. Okay, good. Okay, Micron, if we do a 36-day delta, we're going to go to the 45 strike price, 0.06 delta, I should say. Now, the credit's going to be $22. I just don't know what the buying power effect is going to be. There's several ways you can find buying power. The best way is just to open up an order, put in a contract, set your midpoint offer. We're going to do 20, what did I say, 22? 449 is the buying power. Okay, so it's only going to be about 5% ROI. Not enough money. It just doesn't work, you know. For other strategies, I'm sure Micron could work. It might even work with, you know, something different, but it just doesn't work. And I don't try to put a square peg into a round hole. You know, there's already enough dance into this and enough where you have to kind of wiggle here and there. I'm going to stick to what is just popping off the chart and which work with what works. There's no doubt about it. So the numbers just don't work on that. I'll explain all the numbers here in a minute. Cisco's next. Cisco. Got a 21 delta. Here we are right there. August, 36-day option. Strike price we're going to do is the 41 strike, 0.21 delta. By the way, if you ever just click the line you're going to do, it will highlight it for you. That way you can kind of keep your eyes on it and whatnot. Do a net credit of 0.40, 40 bucks. Now, how do I know that? Well, I'm reading these numbers. But what you can do is you can sell an option, set up an order as if you're going to do it, make sure it's on one contract, and then find your numbers. The max profit is your net credit. Just write that in. It also says credit right here. So we got 40 on 612. And that one's okay. The cushion is 3 here, which is pretty good. Okay, it's not a high volatility stock. It was a little bit lower volatility. So we're getting decent cushion. We're getting decent credit. That's kind of like one of those Goldilocks type of trades. Yeah, right? That's right. Well, August. Let's move on. And let's do rig. You know, and by the way, here's one of the biggest challenges. And as a trader, it can get really mixed up. Professional traders disagree on some of this stuff. And so you might have one mentor say do 10 delta, the other mentor say 15. Have you guys ever noticed that? Okay. Yeah, that's okay. Your job is not to try to mirror everything I do. During a session like this, hopefully you're getting some perspective, some philosophy, some process. And if you can come away with one actionable thing to add to your process, it's worth your time. You know, one new way to think about it. Would you hold these trades through earnings? No, I would not, Keith. No, these are not earning strategies on this one. That's right. ATR, it's like breathing room. It would whip you out if the ATR is too small. It can. Yeah, your stop loss is going to be set there. So it's going to whip you out for sure, you know. And absolutely. And here's the thing. Is it okay if you have enough back-tested data to tell me that you're willing to do a 7-day trade on this? Sure. But until you're at the point where you're a year or more in your experience, don't deviate from those basic rules. That's my advice. Whatever is built into the playbook, try to understand them, try to understand all the nuances, but you got to build stuff that works for you. Now here we are, rig. Let me get back focused here. Rig, 18 delta. Strike price is going to be down here at the 12 strike price, 0.18. Net credit, we're going to come in at 20 because the bid is 19. The ask is 21, so I'm going to put a $20 net credit. When I build my offer, set one contract, I do a midpoint offer. Here's my confirm and send. And by the way, the best part of the whole class is coming up here in just a minute. $20 cash flow, 120 cost, okay? So I put in 120 buying power. That's decent, but the cushion is not there, okay? You know, I see traders sacrifice safety far too often. It happens a lot, and I get why. We're going after the money, you know, and I understand, you know, you see an ROI that's bigger, you think, well, I'm going to go for that, but the cushion is not great there. 2.1 is qualified enough to trade. Whenever you take low cushion, and here would be a philosophy. If you have a lower cushion and you still trade it, you better have a perfect technical entry, okay? Right? You better have a perfect technical entry. And it comes down to basics. That's not a perfect technical entry, okay? You know, think about that. So if the cushion is smaller, the ATR buffer is smaller, the chart has to be perfect. You know, and I don't think Rig's chart is perfect for an entry today. Square. Let's do this one here next. August, 36 days. Let's look at SQ. Start with that 20. That's the 60 strike, 0.20 delta. Net credit 131. This one's going to be interesting. Set 1. 604. This cushion is not there. So what could we do with Square? Here's an example where the credit is so good, I feel like I could go lower delta and make it work. So I'm going to go test the lower delta one. Okay, with some of the other ones, it wasn't going to work out, so we kind of skipped through that. But Square could work out. I'm going to try the 10 delta on Square, 36 days, 55 strike, 0.10 delta. I'm going to pick up 56 bucks. I build my offer. I set one contract, put a midpoint offer at 56 in, 548 buying power. That's a beautiful thing. Pretty good cushion, 3.8 standard ATR buffer, 4.5 ATR buffer, pretty good ROI at 10.2%. The standard is there, the Royd is there. I think I like that one the best so far here, guys. Type in the word Goldilocks. Okay. Do you remember the old Goldilocks story? We tell our kids, we heard it when we were a kid. Okay, put in the word Goldilocks. That's right. When you're credit trading, you're really looking for Goldilocks scenarios. You don't want to take the hottest, you don't want to take the coldest credit. You got to find something in the middle that has cushion and balance and a good chart and good credit. That's the nature of that philosophy. It would be so easy to just go out and find a 40% ROI, okay? But that doesn't make it a good trade. In fact, you're probably not going to be profitable trading that way. Traders that always chase ROI all the time, they're the ones who get whipsawed around in the market. And if you never get enough money, then you probably, it can be difficult when you're trading stocks like AT&T or Coca-Cola as well. So you got to find those Goldilocks type of candidates.